Hello friends, welcome to this episode on Educative series. Here we will be speaking on the summarization of the prospectus, IPO prospectus or red herring prospectus or RHP as we call it of Monika Alcobev Limited. This is a company which is going to be listed in the SME segment of BSE. The IPO is open from 16th July 2025 to 18th July 2025. The minimum investment amount is rupees 2,16,800. The RTA for this IPO is MUFG in time. I am currently not registered with the regulator in India like SEBI, RBI, etc. For details of disclaimer, please go through the screen in front of you. In terms of issue details, the issue is open from 16th July 2025 to 18th July 2025 with the anchor investment portion being able to apply on the 15th of July 2025. The issue size is 57 lakh 91,200 shares, which includes 4 lakh 17,600 shares, which will be allocated for the market maker. The minimum lot, as we mentioned earlier, in terms of allotment, it is 400 shares. In terms of application, it is 800 shares, totaling to about rupees 2,16,800 at the upper cutoff. The price band is from 271 to 286. The face value of the shares is rupees 10. There is no employee reservation in this particular IPO. Now we will talk about the brief of the company. This company was founded in 2015. This company is in the business of import, distribution and marketing of well-known alcohol and beverage brands. 70 of them as of 31 March 2025, as is mentioned in the prospectus. The IPO is a mix of fresh issue as well as OFS. Fresh issue is 47,91,200 shares, which constitutes 82.73%, and the OFS portion is 10 lakh shares, which constitutes 17.27%. As far as the import, distribution and marketing is concerned, the company, as we mentioned earlier, deals with 70 labels. Out of this, the 6 labels which are the most revenue earning for the companies: Belenkaya, which is a vodka; Jos Cuervo, which is tequila; Bushmills, which is Irish whiskey; Rene Martin, which is cognac; Choya, which is the liquor; and Country, which is also a liquor brand. Brief about the company. The second part is about the market share of the company is about 5.6% to 8.8%. The projection of about 10% in terms of projection from the year 2025 to 27. The CAGR of the company for the last 5 years, that is 2019 to 24, is 18.5%. For the business is going to be 11.7% as is projected by the company for the year 2025 to 29. There are 6 warehouses that the company operates from in Maharashtra, Haryana, Delhi and Karnataka. The biggest of these warehouses is in Navasheva, which actually has custom cleared goods arriving at the port, and as and when required they ship it out from this Navasheva warehouse to the various warehouses in the country or to the distributors or retailers or other sale points of the company. The use of the proceeds of the IPO would be used for working capital, retirement of debts or payments related to debts, secured or unsecured, and for general purpose expenses. In terms of financials, as you can see, the company in the last 3 years have performed better as far as percentage improvement is concerned, with each and every head, that is equity shares, net worth, then total borrowings, revenue borrowings, total income, EBITDA, that is earnings before interest, tax, depreciation and amortization, in terms of EBITDA percentage, in terms of PAT, that is profit after tax, in terms of PAT percentage, in terms of EPS, in terms of RONW and NAV. In all these heads, they have really performed well, except for one head, which is RONW, where it is reduced, which is something that we need to look at. In terms of borrowings also, they have reduced their borrowings, but still it is not up to mark in terms of the borrowings being higher. But then, as is mentioned in the prospectus, the company would continue to borrow if required, because that would shore up the working capital, which will increase their holding capacity to hold the liquor and other beverages that they would be importing. In terms of financials, the top 5 customers contribute to 89.70 crores in the year 22-23. 23-24 it was 85.08 crores, 24-25 it was 70.66 crores. This constitutes about 64% and 44% and 29%. As you can see, the company is striving to reduce the concentration risk of the top 5 customers. If they are at the same level, if they are operating, they would be reducing it much further in future. Now we will talk about the factors, that is the strengths and weakness of the company. As is true with all companies of repute, the litigations are there against the company, its promoters group, the directors, the key management personnel. These are all small in number, but of course they are there. So if any of these decisions were to be going against the company, there is a possibility that the company's bottom line may get affected because of the payouts that they need to give to settle the case. Competition is always there around the horizon. So any issues with respect to the exclusive selling rights that they have presently with these labels, if it is cancelled, or if it is distributed or split with different groups, then there is a possibility that the company may lose the exclusive market shares that they presently show. Availability is a concern if there is a requirement from several centers at the same time. They will be making it difficult for the company to reach out the required products from the warehouse to the location concerned. Another possibility is because of the transport and other such challenges, maybe the product that was demanded at that point in time was not available in the warehouse. So these are the few issues with respect to availability. We will talk about advertising now. In the case of advertising in India, at least, presently advertising of alcoholic beverages is not allowed. So the company cannot really advertise in any of the medias that is available today. Surrogate advertising, of course, many of them do, but that is a different ball game altogether. So the only advertising that the company does presently is in terms of the foot soldiers or the salespersons of the company going around to the various customers, getting new customers, ensuring that the existing customers are dealing with them for the requirements. So this is about advertising. In terms of the risk, there is a possibility that these 4 or 5 locations where the company is presently storing its produce in, that is the warehouses, if any of these states were to be declared dry state, then there would be a challenge in terms of shifting the warehouse from location A to location B, that is to a state where the dry state is not in operation. So this is a bigger risk if at all it were to come about. Now the company has appointed 2 rating agencies for rating their short term and long term obligations of secured and unsecured debts, that is they have taken up from the company from the banks and others. So the first is the acute rating agency, which is given acute A3 rating for long term and acute BBB minus stable outlook for short term. In terms of rating 2, it is IVR A3 and IVR BBB minus. The selling price is something which is a very touchy point as far as this product is concerned, because of the high duty levied. A small change in the selling price would drive away the customers if they are not really married to this label that we are talking about or this company is selling. Next will be the distribution. The company is distributing its products in India and Indian subcontinent. In India, they are covering 20 states and union territories, and in the Indian subcontinent, other than India, they are covering Nepal, Sri Lanka and Maldives. The customer base for the year 22, 23, 23, 24 and 24, 25, 69 increased to 77 and decreased further to 671. So if you look at the last 3 years, there is an increase of 2 customers as far as the customer base is concerned. In terms of the revenue that comes to the company, Maximum revenue is from whiskey and tequila. So if you look at 22-23, it is 30% for whiskey, 2024 is 34.23%, and 24-25 is 36.69%. For tequila, it is 28.93%, 31.54%, and 35.28%. So you will see that the concentration risk of tequila and whiskey for this company is increased gradually from about 60% to 65% to about 70%. This is a cause for concern, as the company's revenue to the extent of 70% as of March 2025 is dependent on these two types of drinks. Next would be the policies issued by the government. Government in not only in India but also in the other places where they are delivering their products, that is Nepal, Maldives and Sri Lanka. The regulatory policies, that is of SEBI in the case this company after it is listed, then the ministry is there and other government agencies will be there. Taxes and tariff is something that the company needs to be worried about, because taxes they will be paying not only in India, which is a high tax for an imported item of this variety, and tariff also might play a role if it were to be introduced by the other three countries where the company is selling its produce, transporting out of India. So these are the four risks that the company needs to be wary about. Companies, as we saw earlier, the company is importing the produce from a foreign country. So the currency would be paid, or the money would be paid in currency other than Indian currency. So it could be dollar, euro, etc. So here, since the company is not hedging the bets against rise or fall in the foreign currency, there is an exchange rate risk, pronounced exchange rate risk, which we need to be wary about. In terms of jurisdiction, the prospectus mentions that the company has made it very clear that the jurisdiction would only be in India. So all cases, if any, put against the company would be in the Indian territory. As far as touch points are concerned, the company has increased its touch points slowly from 2020-23 of 3858, that is 3858, to 4366 to 5042. So 5042 touch points are being catered to by this company in the year 2024-25. In terms of percentage increase, it is 13.17 between year 1 and 2 and 15.48 in the year 2 and 3. So the touch points is in the increase, as we see. Now we will talk about the inventory in terms of number of days that the produce remains unsold or not being sent to the end destination. In 22-23 it was 169, and the next year it was 266. In the year after that, that is year ending 31 March 2024, it was 374. In future they are planning to increase it to 380 and 438. It's obviously a case where the inventory will increase, maybe because of the money that the company is collecting now in terms of working capital, etc. This is likely to bring in a little bit extra income for the company, as we know alcohol cost of the alcohol increases as it ages in certain cases. The fund utilization management is given to the agency acute. So whatever is being spent by the company will be audited, checked, double checked, verified by this agency. Should you find this video informative and educative, kindly pass it on to your friends and relatives. Please press on the like button and subscribe to this channel if you were to have liked it. Doubts, queries and suggestions are welcome. Please reach out to me at ramkbharosay@gmail.com. Thanks.